Hey guys, are you wondering if your LLC will get audited? Well, in this video, I am going to be sharing with you reasons why an LLC gets audited and things you can do to avoid an audit. Typically, when LLCs get audited, there are several reasons. One being not using your EIN number or not having an EIN number. Because LLCs are so simple to set up, many people set their LLCs up on their own. And when they do that, oftentimes I find they fail to secure an EIN number, employer identification number, with the IRS. And when this happens and they file their tax return, the state revenue department reports to the IRS that you now have an entity and the IRS is looking for you to have an EIN number. Therefore, that triggers an audit. The second thing that typically happens is the EIN number is wrong. When you get an EIN number, you should receive an SS4 letter. That SS4 letter is like having a social security number for your business. It's very important to keep a copy of your SS4 letter. And it's even more important to make sure that the number you use as the EIN number when filing your income tax return matches what IRS has in its system. When it doesn't match, it's going to automatically trigger an audit. So make sure you keep that information correct. Another thing that triggers an audit with an LLC is not filling out the forms correctly. Many people do not realize that all the boxes that come on an IRS form are there for a reason. And sometimes when you're filling out those boxes, you will inadvertently check a box that does not apply to your situation. Or you don't fill out all the boxes and IRS realizes that the person who completed this tax return probably doesn't know exactly what they're doing. When IRS is flagging a return for audit, they're looking for the collection of additional tax. When there's errors on your tax return because you're not properly filling out the forms, IRS thinks that there's going to be errors in other things on the tax return. Maybe there's going to be errors in calculations. Maybe there's going to be errors in the way that you're reporting your income. So one error leads them to believe there's going to be other errors. Make sure that you know how to properly fill out the tax forms for your LLC and know that certain things go together when completing those tax forms. For an example, if you were taking a trip somewhere, you would probably carry some luggage with you in your suitcase. So luggage tends to go with travel. When you're filling out your LLC forms, certain boxes that you check correspond to certain other boxes that you check. So for example, if you're a retail business, you should probably have cost of goods sold filled out on your tax forms. And when you don't have that, IRS knows that something is incorrect. So making certain that you fill out your tax returns correctly is going to help prevent you from triggering an audit. Another thing that gets an LLC audited is not reporting all of your income. This is a really big deal. I think that many times business owners think that IRS has no idea of how much income you made, or you innocently do not report all of your income. Let me give you some examples of how this happens. I hear taxpayers say to me, "Oh, I didn't receive an 1099 from that business, so I'm not going to report that income." I want you to realize that as an LLC owner, you're responsible for reporting all income, whether you receive a 1099 or you do not receive a 1099. Code section 61 states we have to report our income from any source derived. If someone sends a 1099 in on your business and you don't get a copy, you're still responsible for reporting all of your income. Many taxpayers believe, "Oh, a 1099 didn't come to me, so I don't need to report it." Maybe they didn't send you a copy, but a copy went into IRS. The other thing that happens many times is business owners will get audited and IRS will see that they paid you a certain amount of money. Therefore, when it's your turn, IRS will know that money has come to you. Reporting all of your income is very important so that you can prevent your tax return from being audited. I highly recommend that all business owners, especially LLC business owners, that you do a deposit statement analysis. Go through all of your bank statements, add up all of your deposits, business and personal, and make sure that you can account for all of that income. Because if you do not, you will flag an audit with IRS. IRS also has relationships with banks where they're looking for large deposits that go into your checking account. And when they see large deposits going into your checking account, IRS can go directly to the bank, check on that checking account to see how much money that has gone into that bank account. So make sure that you account for all of your income, get a good accounting system in place so that you know exactly how much money you have made. Realize that you are probably a cash basis taxpayer, meaning that you report your income when you receive it, regardless of whether or not you have done the work. Reporting all your income will alleviate your risk of getting audited. It will keep you in good stance with the IRS, and it will avoid a lot of problems moving forward. So make sure you account for your income so that you can avoid an audit. Another situation that will trigger an audit is you having a Diff score. A Diff score is where every time a tax return goes in the system, IRS compares that tax return to all other tax returns that go through the system. IRS makes sure that every tax form goes through the Diff system, and it's the discriminant information system where it is looking across all IRS platforms to make certain that you're not duplicating dependents that are already on a tax return, you're not duplicating Social Security numbers that are already on a tax return, that the income that shows up on your tax return also shows up as the same income reported in the IRS system. It also looks for discrepancies. Why is your income so much higher than someone else in your same state, same region, same geographical area, same business type? Why are your expenses higher than someone that's in the same business, same region, same geographical location? If you get a Diff score of more than 3 points, your return is going to automatically be audited and get flagged for a human to look at your tax return. Many taxpayers do not know that their return is going to go through the Diff system. That's why it's so important to make sure that you understand the type of expenses you should have on your tax return, to make sure you understand the categories of expenses and the amount that makes sense in relation to your income. Diff scores are one of the IRS's biggest tools in determining whether or not a tax return is going to be flagged for audit. And also realize many times your tax return will be flagged for an audit. Someone will look at it and you won't even know that they looked at your return. But then your return will get a little check mark next to it. You do that a couple of times and IRS will automatically audit your tax returns. So it's really important that you understand what triggers LLC audits. It's really important that you understand to make sure that your tax return is filed accurately, to make sure that you understand Diff scores, to make sure that you use the proper EIN number. These are just some of the things that can prevent you from flagging an audit. If you enjoyed this video, like, comment, and subscribe. I can't wait to see you on my next video.